Folks, today I'm going to talk about algorithmic trading, give you a little introduction and explain why it's so important and show you some numbers that back up my claims. Now, what is algorithmic trading? Well, as you know, personal computers have been around now for about 40 years. Well, they were used for processing words, processing numbers. But a lot of traders don't realize this. A lot of people don't realize this. But one of the biggest advantages or the biggest catalyst to trading happened with personal computers, because now people, everyday folks, were able to backtest systems and algorithms. And there's one thing they realized, that computers don't involve emotions. And your emotions are the biggest detriment to making money in the market, because computers don't involve fear and greed. And when it comes to the markets, people confuse or they mistake fear with greed and greed with fear. Let me give you a really basic, simple example. When people are in a losing position, all right, instead of fearing for more loss, they begin to hope that the position will turn around. And they hold on to their loser. When most people, the average person, gets a winner, they fear that the trade is going to turn against them, and they lock in that winner. So instead of hoping with winners, they fear when they have winners. And instead of fearing losers, they hope with losers. That's just how we are wired. That's how our mind works. And it's very, very, very difficult for some people, not all people, for some people to get past that, because it goes against our human nature. It's like looking down from a building that's 100 stories up and not being fearful of heights. It's hard. It's hard to you may understand it rationally, but your mind doesn't. So you guys know what I'm talking about. We've all been there. So there are a lot of, and another major advantage of computers is a computer can sift through thousands and thousands of lines of code and figure out patterns that would take years and years of time. So computers can take emotions out of it, and computers can make analysis much, much faster. I mean, who wants to sit there and figure out patterns and look through 8,000 stocks and figure out which ones are making highs, lows, so forth, when a computer can do it very, very quickly for you? So that's another major advantage of algorithms. And that's why algorithms have completely gone off in terms of popularity. To give you some idea, about 20 years ago, only about 10% of hedge funds relied, or institutional traders relied on algorithms. Now it's about 80%. About 80% of Wall Street is driven in some way or form by algorithm trading. And that number is not going anywhere. As a matter of fact, a lot of retail traders are getting on the bandwagon. Now, I've been involved in algorithmic trading for 26 years now. And one thing that's recently changed, is we are now able to create stack systems. Now, what does that mean? It's really important, and I want you guys to pay close attention. Back in the day when we started trading, or 20, 30, 40 years ago, you were able to create a system, enter here, exit here. That was a trading system. And if you wanted a system based on different rules, you would have to create another system, and then you would have to take the extract or the results from one system, put them into another system. You would have to do it manually. You could not stack the process. A, it took too much computer power. B, it was very complicated. It almost required a level of artificial intelligence, and computers just were not there. Now you have these engines, and here's the thing. They were available for institutional traders about 30, 40 years ago. Now these same engines are available for the retail trader, and they cost only $2,000, $3,000, $4,000. And if you have a degree in computer science, you could use this without having to invest in hundreds of millions of dollars of equipment and a room full of engineers, like some hedge funds do. But you still got to know how to program these things. And the beautiful part is you can now get an engine to test this that has a stack. And for example, let me give you an example. I could take technical factors like the best stock, out of the S&P 500 stocks. I can compare that to the best stocks in the Russell 2000 stocks. Then, on top of that, I can weed them out by using earnings per share estimates going forward 5 years. And then I can compare how that did over the last 10 years compared to the nearest 3 years. The flexibility, I could do all that in a single test. So these what-if conditions are just added on top of added on top of added others, and they create a stack. And what that allows me to do is figure out via thousands and thousands of lines of decisions and codes, which would literally take me probably 100 years to do what the computer can do in one run. I could take 40 years of data and I could figure out performance. I could figure out, for example, if I look at 12-week periods going back to 1974 and I want to find, based on the past 12-week winning periods, which stock outperformed all other stock, I could do that. And I could do it with a touch of a button. And again, all these runs, all these algorithms, adding fundamentals, adding sentiment. I can even add broker recommendations right now. These things are completely changing the game. And what they're doing is they're causing these algorithmic funds to completely outperform the traditional investor. So let me give you a really eye-opening idea. We have this one trade, one system. It's an algorithmic system. It has entry, exit, stop loss, profit targets, all built into one algorithm. It's called the Storm. And you might have heard of it, you might have not. But this storm, it literally, it's like the perfect storm. Because let me give you some examples of trades we've got from it. Now, keep in mind, S&P, 6% per year on average. Warren Buffett, on a good year, 20 years. And by the way, see, Warren Buffett, he has been underperforming Wall Street last several years. Why? Because his value investing methodology does not take into account 15 or 20 other factors that algorithmic traders can. He's behind times. He's getting a little, his system works well when the market has a big crash and then everything's at value. Otherwise, you're paying premium. So this Storm method takes advantage of stocks making new highs, stocks making new lows, stock momentum levels, sentiment levels, fundamental levels, analyst levels, everything you can possibly imagine, and it uses them in a conditional way. I think it takes over or looks through 9,500 factors. But let me give you some of these trades. This is eye-opening. CDNS, and this is real trades, 141%. LRCX, 256%. Amazing. Facebook, 145%. MXIM, 131% last week. eBay, last week, 200%. CDNS, again, 121%. Facebook, for the third time, 103%. These are, now, some of these trades, they lasted, I'm not kidding, they lasted 2 days instead of a week or 2 weeks. But the bottom line is the system picked them, found them at the perfect time, figured out where to get in, where to get out, and where to put your profit target and stop loss, and selected the best options as well with the lowest volatility and the highest profit factor. The bottom line is, the things that you could do with my Storm platform, it's things Warren Buffett only dreams of. Hope that helps. Folks, pay attention. This is very, very, very important. Right now, massive hedge funds, institutions, and banks, they're all gearing up to take over the market with algorithmic trading, and they plan on leaving you in the dust. According to CNBC, these algorithmics are already dominating over 80% of today's equity markets and far outperforming traditional stock picking strategies. But there's still hope left for the everyday investor. I've developed a algorithmic trading machine that at-home investors like you can use without needing to own millions of dollars in upfront capital. And I'm going to reveal the details to it in the never-before-seen presentation. All you've got to do is click the button below to watch and learn how my Storm can help you not only get ahead of Wall Street, but help you supersize your trading account much, much faster than traditional Wall Street.